This is Cece. Welcome to the Orbit. It is Thursday, May 30th. We are down in the market today. We're down about 0.5%. That's about in line with the expected move, maybe a little bit more to the downside. That is two straight days of a move lower. And as you take the chart out to the 1 month view, you can see a market that was going sideways around 5,300 and now is possibly making its intentions known. We've got some important inflation data tomorrow morning. We'll get into that a little bit more in a second. But for now, we have kind of escaped that 5,300 magnet. 2-day expected move out until tomorrow is almost 0.7% in SPX. That gives you levels of about 52.75 to the upside and 52.05, let's call it, to the downside. If you were looking at iron condor levels and we'll go into tomorrow's expiry, taking that a little bit wider, let's say getting it down so that short put is at the 5,200 level. You could even take this a little bit wider and perhaps move it and lean it so that the short call was 5,300, the short put was around 5,200. We're looking at 5,195 right here. That's a very slightly bullish leaning iron condor. Obviously these trades would be dependent on what happens the rest of the day. You could maybe see a setup if the market finished very weak into the close where you might be able to do a credit put spread down below the 5,200 level. And then perhaps if you saw a bounce tomorrow up in the upper 5,300 level on the short strike to the upside. But that's the setup for the rest of the week with that PCE data tomorrow morning. It is also the end of the month, and it is an expiration Friday. So a couple of things going on tomorrow. TLT, we've been talking about that a lot lately. That's bouncing today, actually, up a pretty decent 0.8%. That's after two straight pretty ugly days. And if you go out to the 3-month chart, you can see it's basically retraced about 50% of that move higher that was really helping power the market higher when yields were falling back in April, basically. In that April rally, we saw higher, and now it's rolled over, and the market really hasn't rolled over. We've been held up by things like NVIDIA and some of the AI and chip names, while a lot of the market underneath the surface was starting to roll over a little bit. And if it wasn't, a lot of stocks were going sideways along with the market. So if TLT likes what it sees tomorrow morning, if the bond market likes what it sees tomorrow morning, that could have been it for the stock sell-off, and it might have only lasted a couple of days, and we could be right back to that slow grind higher. Or if you see TLT start to tank down now that we're below this 90 level, start to tank down to those mid 80s, that would put a lot of pressure on stocks. So keep an eye on that. As far as the expected move for TLT into tomorrow, we've got about a 0.7% expected move in TLT, so very similar to the stock market. You can see where that would put it, not quite to yesterday's lows. Yesterday's lows would be something to watch for in TLT. You've got things like IWM that are very dependent, very rate sensitive amongst the major indices. You can see what that's looked like the last 3 months. That's perhaps rolling over here. You can see where we are on that April rally. IWM has really been hanging out above and below slightly this 200 level going back at least 6 months. So keep an eye on IWM around this 200 level, which is kind of important. We talked yesterday about the market and low volatility in general, and perhaps hedges for those that are looking for some protection out over the summer, or even people that are straight up bearish. This is a great indication. We were talking about break even yesterday, just $3-4 lower if you do put spreads out even into July. And you see again, we have a SPY move down 2.5 points right now. And so these are the types of trades where you go out into, and it's still low volatility. It's still 12 IV out there. We saw it as low as at about 11 when we started talking about it a couple of days ago. But that's the type of thing. If you saw any sort of market bounce, perhaps, and you had missed your chance to put on any kind of hedges, and you wanted to have hedges for this summer, You can create break evens about $4 away in SPY still, which is not much. That only takes a day or two to hit your break even if the market continues lower.